Hey
Hello.
everyone. Hello.
Is anybody out there?
Hey everyone. Happy Tuesday. It is Tuesday, right? Tuesday. Are we showing up on the right day?
It's always Tuesday.
Well, hello everyone. Happy
It's supposed to be
Tuesday.
Taco Tuesday, but we're not having tacos.
Dang it. Well, we're not having tacos. It's Taco Tuesday, but no.
Maybe I'll work on that, but not tonight.
Oh, I gotcha.
Okay.
Okay. Well, guys, welcome to the evening edition Tuesday night of what the heck's going on in the housing market, right?
What the heck's going on?
What the heck's going on
Hey,
in the
Purple
housing
Drink.
market?
He's back.
Hey, Purple Drink, it's good to see you. How are you tonight? Oh, and question for you: if you're a homeowner right now, what interest rate, what mortgage rate do you have? What mortgage rate do we have right
We have
now?
a good one.
Yeah, I think we do.
4 something.
I thought it was like 3.75.
Oh yeah, yeah.
So right now we have.
Oh, that.
Hey, I'm good. Good. I'm so glad you're doing well. Yeah, we have personally a 3.75% interest rate.
Yeah.
So yeah, probably never move along with everyone else that is struggling, that has those really beautiful low rates. So hope everyone is doing well. Today we're going to talk about mortgage rate predictions, what's predicted for the rest of 2025. We're going to go through an article that tells what every single all these professionals, what they're predicting. Okay. Yeah. Oh boy. Oh, look at this. Purple Drink has a 2.6. Whoa.
Very nice.
Can anyone out there beat that? Because I think that is that's rock bottom. You know what would be awesome, Purple Drink, is if that was an FHA or a VA, so somebody could assume it, because that's a beautiful rate right there. Everybody chime in. Tell us what your mortgage rate is. And has anybody in there have a lower than a 2.6 fixed rate? Because that's pretty impressive. I have to say, Purple Drink, I am impressed. I feel like things are heating up between the Fed and the President Trump, and between Jerome Powell and some of the members of, right there on the board with them. Some things are getting interesting. VA refinance. Wow. Nice. If you found a VA buyer, and they wouldn't necessarily have to be a VA buyer, but in terms of entitlement.
If you want to keep your entitlement.
Yeah. If you wanted to keep your entitlement, someone could assume that. But they would need to have VA benefits. So, beautiful. Okay, let's see here. A 6. Okay. Hey, Fahim, how are you? A 6 locked in April 2025. Well, you know what? 6 isn't bad. It's not bad compared to pushing 7, which is what we've kind of seen this year. So,
but we are at.
Let's see what are today's rates. But everybody else, chime in. Tell us what your mortgage rate is. Can anyone beat this one? I bet no one can. 2.6, that is pretty impressive.
Oh, it went back up a little bit.
Okay.
It was at 6.6. Now we're 30-year fixed for conventional is at 6.7 right now.
All right, so we're back up to
FHA 6.5. So yeah.
Okay, so we've kind of hovered this year between just under 7%. Have we got as low as 6.5%? I don't think we have.
Yeah.
All right, let's see here now. I got that locked around 2021.
Maybe in.
2021, that's exactly when the magic was going on. It's when you had an insane housing market, but you could also get amazing interest rates.
Looks like the lowest we probably got was 6.6.
6.6. Okay, so Dale's looking, and when was that? We got all the way down to 6.6.
July. This just recently, yeah.
Okay, so just recently,
just
recently we got down to 6.6. Don't you know all those people that refused to buy in 2021 are just kind of regretting it? If you're one of those people, do you regret it? The 2020s when you were like, now wait, all those people that didn't get those beautiful rates. But anyway, I've got an article to read to you. So let's take a look. Right there is the question of the hour, isn't it? When will mortgage rates go down? The outlook for the second half of 2025. So let's dig into this. What do you think? Let's dig into this article here. Let's see what we have. Let's see here now. Okay, I think these first lines are funny. Please, begging for lower mortgage rates could be the battle cry of the decade. I love it. That's just like so dramatic among aspiring homeowners. Clearly, we have a dog. Sorry, guys. Sorry about that. Let's see here. Where was I? Anybody else got a dog around here that barks in the middle of phone calls and meetings and all that? Because ours does it all the time. Part of working from home. Okay, where was I? Let's see. Pleas for lower mortgage rates could be the battle cry of the decade among aspiring homeowners and those looking to refinance, and for good reason. According to Freddie Mac, mortgage interest rates are down for the 5th week in a row. And although this week's decreases are a little more notable than usual, rates are still higher than many hopeful buyers and refinancers would hope for. And that right there kind of dates this article, guys. You can see it was written July 3rd. Mortgage rates went up a little bit this week. Isn't that what you were saying? So they kind of eased up a little bit. And one thing, when I read that, I'm going to tell you guys, when I read this part about refinancing, I think about all the people who were told, marry the house, date the rate, and how they did kind of that rate buy down. And they were promised, rates will be down within a few years. Rates are going to come back down. And I wonder how many people are kind of stuck now on that. So I think if you're still being told, marry the house, date the rate, don't do it. Be really careful.
But make sure you can afford it.
Make sure you can afford the final rate. Okay. Yeah. And then factor in that, make sure your escrow is set up right to make sure that you're not going to be put in a bad position. So yeah, that expression, I think, probably gets some people in trouble. All right, let's see what we have here. As of July 3rd this year, Freddie Mac reported that rates for 30-year fixed rate mortgages had stayed below 7% for 24 consecutive weeks. This time last year, mortgage rates were averaging 6.95%. So really haven't changed that much. But considering rates are still not far below 7%, we get it. If you feel like you can't catch a break in the current economy, and I think a lot of people probably feel that way. Let's see. So will mortgage rates go down at all this year? Okay. This is what this article says. If you're looking for a substantial interest rate drop in 2025, you'll likely be left waiting. The latest news from the Federal Reserve and other key economic data point towards steady mortgage rates on par with what we see today. All right. That's a pretty bold statement. I want to know, do you agree?
I really don't know. I mean, I guess because it's quite possible with Powell in there. So now, and he won't be out until next year.
Next
so
May. Mm-hmm.
So next May. So that's probably a good chance. And it would be weird almost to have the rates go down in the fall, and then we have like a bigger real estate market in the fall than we did in the spring. So I don't know.
Which is what happened last year.
Yeah, I think.
Yeah, that's what happened last year.
Not as much. I think it would be bigger this year.
Yeah, last year we had prices go up between like October to December-ish.
I think a lot of people are thinking, it's going to be springtime or whatever, May, late spring, something like that when it changes. So
yeah. So, what do I think?
I know that's what some builders have been saying. I know some builders have been talking to her saying, or the sales consultants were saying this is going to be a busy fall. So
yeah, so. That is true. And I really, and I tell you one thing that I've been really immersed in studying this week and the past week. And there's a whole wild card that no one's talking about that I think people are missing. And so like, if you were to ask me, like, what do I think is going to happen? What comes to my mind is activist treasury issuance, activist treasury issuance, because this is a move that Secretary Treasury Yellen pulled last year, right around the election. And she got a lot of heat for it. Yeah. And basically it's when the government, the Treasury, chooses to not sell their debt in 10-year Treasury notes. They hold it and they only sell it in short term. And so what happens is then you don't have the supply going out in the 10-year notes. In fact, I'm going to do a whole video about this, but basically it's kind of funny, like along party lines, like she was really criticized for doing this. And now we have opposite political party saying that's what they're going to do. They're recently, at least recently, President Trump said, I'm holding all the debt in short notes. I'm not going to issue any 10-year bills. So he's kind of the king of, putting things out there like they're big and then not really doing it like he's done with the tariffs. So I'm kind of like, is he really going to do this? So if he in the Treasury refused to issue any 10-year Treasury bills at all, okay, right? All of a sudden you're going to have a supply issue.
Yeah.
Okay. And so nobody's talking about that. And so like when I think about where, what are mortgage rates going to do? I think we've talked about this a lot. What are mortgage rates tied to?
10-year Treasury bond.
10-year Treasury bond, right? And then the other thing about the 10-year Treasury bond is when there is more demand for it, okay, the yields go down. The yields go down. So really when we think about mortgage rates, they're tied to the yields, right?
Right, the yields.
They want to be competitive. So if the yields go down, mortgage rates, are going to go down. So I don't know. In the article we're reading, nobody's mentioning that. Like there's no talk about it. And I think a lot of people have missed it.
Well, you have to look at the ones. There are some macro economists that are, if you look at their long-term history of how they follow the trends and everything real well. They actually talk about that stuff, but usually most of those guys, you got to spend a ton of money to be subscribed to them too. But yeah.
Anyway, guys, have that one on your radar. Everything we're reading today, they don't even mention it. But just know that if President Trump were to follow through,
the general media, that part, they don't.
Nobody's going to talk about that. So just know that's a wild card.
Know about it.
That's a wild card. Everything we're going to read today doesn't even mention it. I only know about it because I've been really researching it, and I'm making a video about it. So let's go ahead and
guys
and
that know
dig back.
what you're talking about, they talk about it. So.
You know what? That is a great way of putting it. The guys that know what they're talking about, they're talking about it. Yeah. So I definitely recommend that you guys just Google that activist treasury issuance. There is a 32-page white paper on it written by two economists who have their PhD from Harvard in economics. And so I
guess that's a no good place.
Yeah, you guess so, like their PhD. So a lot to be said about that. Again, not even in this article
Harvard
today. So that right there, what I just gave you is just, extra, it's not even in the article. But let's go ahead and take a look at what we've got here. Let's see here now. When the Fed, the common nickname for the Federal Open Market Committee, held its June 2025 meeting, it voted to keep the federal funds rate the same for the time being. After cutting its rate 3 times at the end of 2024, it has yet to slash the rate in 2025. However, the central bank is still predicting 2 rate cuts this year. Okay.
You have 2 more chances.
Yep, 2 more chances here. That federal funds rate tends to directly influence rates on shorter term lending, right? We all know that, shorter term lending. While mortgage rates aren't directly based on the Fed funds rate, they typically mirror Fed fund rate trends. So if the Fed funds rate goes up, mortgage rates will likely follow. The inverse is also true. I know you're right here, ready to say.
We had a couple of times where it went the inverse. So this year,
well, isn't that what happened in December?
Yeah.
Yeah. So that's not a definite. This past December that it happened to where it was the opposite, where one went down, the other went up.
Too, but
anyway. So it's not a direct correlation at all. But do know that when we talk about the Federal Reserve doing their rates, it's tied to short-term lending. And then when I was talking about President Trump and messing with the bonds and the yields, that's where the mortgage rates are more closely tied. All right, let's see what we have here. Let's get back into this article. It's good stuff. All right, the latest on 10-year Treasury yields. While short-term lending rates closely follow the Fed funds rate, mortgage rates, okay, and this is what we were just saying, more closely follow the 10-year Treasury yield. As of July 1, the 10-year Treasury yield sat at 4.26%, down just a smidgen from 4.36% a year prior. So imagine if suddenly,
back up a little.
So imagine suddenly if Trump refused to sell anymore. If he said, nope, we're not selling any more 10-year treasury bills, what would happen?
Yeah.
And that's what he said he would. That's what he actually said that he was going to do, was to not sell anymore.
Yeah.
When will mortgage rates go down? Okay. Mortgage rates have actually been inching down for about a month.
Yeah.
But then this week they inched up a little bit.
Barely.
Yeah.
Yeah.
Though the
They
changes
didn't inch up as much as they came down, but yeah.
Okay, that's good. Though the changes haven't been significant.
Yeah.
The June Fannie Mae and Mortgage Bankers Association forecasts predict that rates will continue to gradually decrease, but will stay above 6% throughout 2025 and 26. Wow.
Yeah.
All right, mortgage rates forecast for 2025. Experts predict how much rates will drop. And of course, hopefully it goes without saying, as I'm talking about, President Trump and everything, I don't claim to be an economist. I'm just a student, always learning, always studying, and then sharing with you guys what I learned. So Mr. OL96 says, hello, Wendy and Dale. Hello to you. Do you have a mortgage rate? We're interested to know what it is. And the rest of you guys chime in. We'd love, I see a lot of you out here watching. Let us know what mortgage rate are you sitting at? Or what mortgage rate does it need to be if you're thinking about buying, yeah, but you're going to wait? Like what mortgage rate does it need to be? So pop on the chat here. Share with us your thoughts. Okay, but back to the article. Mortgage rates forecast, the experts. Okay. After reaching a peak of 7.04% in January of 2025, mortgage rates retreated to the mid 6% range in March, but then reversed course and have remained stuck between 6.75% and 6.9% since early May. So that sounds about right for what you were seeing. The average 30-year fixed mortgage rate was 6.85% the first week of June, declining by only 8 basis points to 6.77% by the end of the month, according to Freddie Mac data. 1 basis point is 1/100th of a percentage point. Okay. All right. Mortgage rates. Okay. This is, of course, a lot of what the Federal Reserve is kind of hanging on to is mortgage rates could stay elevated or even rise if President Donald Trump's tariff policies end up fueling inflation. Indeed, the Federal Reserve continues to delay cutting its key interest rate as it monitors inflation data. Consequently, many housing market analysts foresee mortgage rates only gradually easing by the end of 2025, if at all. And let me just tell you, boy, is that... that is cause for controversy. There are people all over the sides of the fence just so angry because Jerome Powell actually came on and said, yeah, if it wasn't for the tariffs, we already would have cut the rates. And so he actually openly said that. And so there's all this. There's a lot. I don't know if you guys have been, kind of looking at this, but boy, there's a lot of heated opinions. Yeah. I know it's all over my YouTube feed. You look at one of them and then YouTube starts sending them all to you. So I know there's a lot out there. A lot of controversy about this. A lot of those
people, though, don't look at long-term effects and stuff. So
very true.
What is needed. So, and that's why I think a lot of this, when the Fed messes around with the economy, I think it affects short-term good for a minute, but then in long-term, it kind of messes things up and stuff. So yeah.
Very true. Yep. Very true. All right, let's see. Where are we? Mortgage rates. Could stay elevated. We already read that one. All right. Fed pauses rate cuts again. Okay, this was June. In a widely anticipated move, the Federal Open Market Committee, the Federal Reserve panel charged with setting interest rates, voted unanimously to keep the federal funds rate unchanged at its June 2-day meeting. The federal funds rate is the overnight borrowing rate for commercial banks and credit unions and indirectly influences mortgage rates. And hopefully, guys, if you're understanding, I just really want to make sure that everybody understands here that we are not saying a Federal Reserve drops mortgage rates. I think sometimes people get that confused. Super important to understand that distinction. Okay, no mortgage rate yet. I'm looking to get one this time next year when I look into purchasing a home. We'll see where they are sitting at next summer. Yeah. Boy, that is true because don't you know, Jerome Powell's his term expires in May. Yeah. So we can be guaranteed by next summer that, the way things are right now, there's going to be a different Fed chair. All right. I figured that was the reason why rates haven't come down, tariffs. Honestly, that's a true statement, Purple Drank, whether it's causing inflation or not.
Yeah.
It doesn't matter. That's the reason
They're
that,
it on
that's what they're blaming it on.
It really truly
yeah.
is.
So even if it's not causing any inflation at all.
Truly causes inflation, but yeah.
But it doesn't matter if it does or not. If that's the reason they're hanging on to, then that it is what it is, right? All right. Let's see here now. In a recent testimony before the House Financial Services Committee, Fed Chair Jerome Powell defended the central bank's cautious stance, stating the need to learn more about the impact of tariffs on consumers before making any rate adjustments. Very true. Meanwhile, mortgage rates have stayed below 7%, but not by much.
Plus, so that statement that Jerome Powell made there, that this also shows that the Fed is always in the rears on their decisions. Always. They research, and then and it's already passed. So, yeah.
He was so late on raising rates back in 2021 and 2022. They were so late. In fact, I'm about to release a video about that. You guys will have to check it out, where I go into the details of how late they waited and what that did to home values. Okay, let's see here now. Let's see. With little new out of the meeting, mortgage rates are likely to continue. So this is Danielle Hale, chief economist at Realtor.com. Okay. Mortgage rates are likely to continue to hover in the high 6% range that has dominated for the last 8+ months. And I would agree, dominated is the right word for that. Okay, what's next? The next 2-day FOMC meeting is set for July 29 to 30. Could the Fed cut rates then? Okay. While some policymakers expressed an openness to cut the federal funds rate in July, economists foresee a July cut as unlikely, since they expect to see the initial impacts of Trump's tariffs on prices. Now, I know most recently a strong jobs report was released that I think kind of minimized that possibility, because there for a minute we're like teasing the idea, because you've got 2 different board members coming out saying they think it should happen as early as July. And so then everybody's like, well, and then they get this really strong jobs report. So but let's see here. Now let's get back to this article. Here's how some experts predict market conditions. Okay, so you guys ready for the predictions from the experts? Here we go. Drum roll, please. Okay, so first one is National Association of Home Builders. Okay, so National Association of Home Builders. It's interesting because, like you said, you've been talking to builders, and they're all saying they think it's
but we'll see.
Yeah, for sure.
Maybe they're just hopeful.
Yeah, exactly. So, all right. National Association of Home Builders, April macroeconomic outlook, Eric Lynch. Okay. This is what he had to say. As of April 10, the current Freddie Mac 30-year fixed rate mortgage sits at 6.62%. While it will not be smooth, NAHB anticipates the 30-year mortgage rate to average around this rate by the end of 2025 and just above 6% by the end of 2026.
So they're predicting slight.
Yeah. It sounds like slight. And it's interesting that they said it's like almost contradictory. Like while it won't be smooth, but at the same time, it's not going to change.
Yeah.
So it's like, what are you saying here? I'm saying like, you better watch the market. If it's not going to be smooth, then we're going to see, changes. Okay. So that's the National Association of Home Builders. Okay, National Association of Realtors. Okay, what they have to say is that rates will average, if you look at the bold print here, 6.4% in the second half.
Make that prediction?
I don't know. I know that this is a recent article, but sometimes they don't release their data.
Average 6.4.
Yeah, in the second half of 2025 and 6.1% in 2026. So let's see. That would be Lawrence Yoon, chief economist at NAR. So mortgage rates can go down with a Fed rate cut if inflation is under control. But it's not going to go down to 4% mortgage rate conditions because we have a huge national debt. It cannot go to 4% and it cannot go to 5%, but it can go to 6% with the Federal Reserve rate cuts and calmer inflation. Found it interesting that his comment, he's directly linking it to the Federal Reserve when we all know it's not a direct link. So I find it interesting that he put it that way. All right, who's up next? Okay. All right, now we have Zillow Home Loans. Mortgage rates are on a bumpy path. Okay, yeah, I can agree with that. The future path of mortgage rates is uncertain, dependent on both economic data and headlines from the new administration's policies. Okay, and this is the senior economist.
Yeah.
And she says, while Zillow expects mortgage rates to end the year near mid 6%, barring any unforeseen shocks, that path might be bumpy. And so that's interesting. Again, they're talking about, I mean, we've got a couple different economists here saying there's not going to be that much change, and yet what change there is going to be bumpy. So
it was always up and down. So
yeah, just kind of moving. And yet we're not talking about extreme volatility.
That way all year long.
Mm-hmm. Mm-hmm. You tell them, Dale.
Whatever.
All right. Okay, so that is Zillow. All right, let's see who's up next. Fannie Mae. Okay, Fannie Mae revises mortgage rate forecast upward. Okay, that's not the news that we want to hear. Per Fannie Mae's June economic and housing outlook, we forecast mortgage rates to end 2025 and 2026 at 6.5% and 6.1% respectively. Well, hold on. Up from 6.1 and 5.8% in our prior forecast.
Wow.
So be patient. You just, you got to hear the rest of the sentence.
Their forecast was off.
Yeah, so their forecast, they've definitely revised it. So that's Fannie Mae. All right. Freddie Mac. Okay. Expect rates to remain high in 2025. According to its January economic, housing, and mortgage market outlook, Freddie Mac expects mortgage rates to stay higher for longer with this year, with the slightly lower rates compared to 2024, leading to a boost in refinance volume. I think it doesn't take much for a lot of people to have to refinance. All of these people who married the house and dated the rate, it's not going to take much for them to jump in.
Close to 6.
Yeah, if you can get it even barely close to 6, you probably got a lot of people motivated out there that were not planning on not being able to refinance by this point. Okay, let's see who is next. Okay, Mortgage Bankers Association. All right, they say rates will average 6.8% in the third quarter and recede slightly by the end of the year, according to the MBA's June mortgage finance forecast. Okay, they revised their rate projections upward from last month. Let's see, they now predict the 30-year fixed rate mortgage to average 6.8% in the third quarter of 2025, up from 6.7%, and end the year at 6.7%. Wow, up from 6.6%. The MBA expects an average rate of 6.6% in the first quarter of 2026, up from 6.5%. Wow, not much good news so far for those of you that are waiting and watching for rates to come down. All right, BOK Financial. Let's see here. So this is Michael Merritt, Senior Vice President of Customer Care at BOK Financial and Forbes Advisory Board member. All right, this is what he said. Based on recent inflation concerns across the economy, the Federal Reserve does not sound interested in rate cuts anytime soon. So again, you have someone directly quoting the Federal Reserve. So you have to remember it's an indirect correlation, but a lot of them, definitely the Fed plays a role. Let's see. As such, I expect rates to stay in the high 6% to low 7% range over the next few months, a similar range they have moved over the last month. Okay. All right. JOM. You think I pronounced that right? JOM. Mortgage rate movement will depend on the Fed and the economy. Well, there you go. When it comes to mortgage rates and inflation, beyond the usual impact of monetary policy and natural inflation trends, we may see additional inflationary pressure from potential tariffs on major trading partners, said Dan, I'm not even going to pronounce that, economist, housing market expert, and CEO of JOM.
Knightkowski.
Say that again?
Knightkowski.
All right, we want you to say it again just for fun.
Knightkowski.
Let's see. That's a real estate company specializing in new construction home transactions. Okay. This type of inflation could likely cause the Fed to pause rate cuts. Based on current trends and historical patterns, it seems unlikely that we'll see significant declines in Fed rates or mortgage rates this year, given the added inflationary pressure. So it sounds like, you've still got some big believers that these tariffs are going to affect inflation. All right, First American Financial Corporation. A higher for longer mortgage rate environment will continue to dampen house buying power, says Mark Fleming, chief economist at First American.
That was a really hard one.
Oh, yeah. All right. Bright MLS. I'm telling you, they have this. This is a great report. I mean, they've got a ton of experts all chiming in one article. So good stuff. Lots of experts here. Bright MLS. Okay, let's see what they have to say. Mortgage rates should decline late summer. Okay, I expect mortgage rates to decline more significantly at the end of the summer, leading up to the Fed's September meeting, predicts Lisa Sturdivant, chief economist at Bright MLS, in recent commentary. Lower rates could bring more buyers out this fall, but it is becoming more of a possibility that weakening consumer confidence and labor market concerns may cast a long shadow into the fall housing market. Okay. All right, now we got JP Morgan. Mortgage rates will remain above 6.5% in 2025. According to financial services firm JP Morgan's February outlook for the U.S. housing market in 2025, the higher for longer interest rate backdrop is here to stay, with mortgage rates expected to ease only slightly to 6.7% by the year end. Well, I don't know. I mean, it's already eased to 6.7%. So I'm not sure,
who knows?
Yeah. I mean, it's going to stay there or go a little bit lower because they have been going down.
Well, went down below, then back up. So there.
That is true. You're right.
It's the bumpy ride.
It is the bumpy ride. There you go. Okay, let's see. Wells Fargo. Boy, Wells Fargo. Federal fund rate cuts may offer modest mortgage rate relief. While reductions in the federal funds rate should allow for additional mortgage rate relief later this year, we currently do not anticipate mortgage rates to recede below 6.5%. So it sounds like so far nobody has necessarily thought they would come below 6.5%. Yeah. All right. TransUnion. Okay, trade policy. Will keep mortgage rates elevated. Due to the anticipated impacts of announced tariffs on near-term inflation, mortgage rates are expected to remain elevated above 6% in the next quarter. All right, and that is Satyan Merchant, Senior Vice President. Okay. All right, so guys, lots of professionals there. You kind of get the idea here. They're all kind of not, carrying the best of news. But again, not a one of them mentioned activist treasury issuance. Like, I think that it was like, President Trump said that, hey, I'm not selling any more 10-year bonds. And what he said specifically was, I'm not doing it for another 9 months, because he knows by then he's counting down to May. Yeah. And so nobody's really talking about that, guys. So I don't know. Again, I'm not an economist, but I mean, I think we have to consider that. Let me see a few comments here. Then I've got some other things to show you guys. I'm currently at 2.5%. Whoa, somebody, purple drink. Somebody beat purple drink. Sorry. You are now no longer at the bottoms. Let's see now. Where did that one go? Okay. 2.5%. Got my rate in 2021 and looked at moving out of state, but not at these rates and higher home prices. I can't blame you on that one. I think that's hard. 2.5%. That's a tough one. Tough to leave that. Okay. With mortgage rate predictions averaging around 6%-ish, I assume they could be impacted by a great credit score and drop below 6%-ish. What do you think? That'd be a good question for Caleb.
Yeah.
Our preferred lender, Caleb, could answer that one. And also down payment,
debt to income ratio, all that good stuff.
Let's see here now. Hey, Cyber Scott. Thanks for jumping on. I refinanced my New Mexico home. I'm assuming that's what NM is. Conventional Fannie Mae in 2021, 2.5%, 15 years. I mostly did it to free up my VA benefits. I moved to Texas in 2022 and have been waiting for prices to drop. So this is
prices
probably...
don't drop. Sorry.
I don't know, man. Guys, we are in a minute here going to look at stats and see what, and
a couple places.
They are, median sales prices have come down some. So I bet I bet this has been an interesting year for you to watch, because we have seen, as much as he right here wants to say it hasn't happened, it is, we've seen some, we've definitely seen some. Okay, let's see here now. Purple drink sounds like it could fall to about 6%. Unless something huge with the tariffs takes off, hopefully then bringing it down to maybe to 5, maybe high 4% range.
Ooh, I don't think we can sustain that.
Yeah,
I think I think the lowest we could really sustain is maybe 5.5%. Any lower than that,
and the
it's
market
going to
just
go
goes
crazy,
crazy.
and there would definitely be no price drops. There would be price increases by quite a bit.
Yeah, it's so true. Honestly, I'll tell you, all I want is a neutral. I just want neutral.
Mm-hmm.
I want the Fed to get down to a neutral stance. Jerome Powell says that's like a 1-point rate cut if he could get down there, and then let the housing market do what it's naturally going to do without the Fed interfering. Stop messing with it. I mean, that's just my personal opinion. I know you guys all have your own, but that's my opinion. Is can we please just get to neutral territory here? Okay, let's see here now. Let's see. I'm looking for a retirement home, probably a 55 plus community. Is the 55 plus in Fairview good? All right. What do you think? He's going to look it up. He will look it up.
I know we've been looking at.
We have actually, we've been looking at Ladera.
Ladera, nice. They have nice communities. Very true.
Purple drank there for a minute. You were in first place. She beat me by 0.1%. Real close. Yeah. And I don't want to know, has anyone ever gotten below 2.5%? Because that is pretty amazing. Is it true that property taxes might come down in Texas, aside from no state income tax that might help buyers afford the monthly payment? Yes, actually, the legislation was signed. It's dependent on a vote in November, but you would think that people are going to vote for lower property taxes. So yes, property taxes will go down this year, starting, I believe, effective this year.
It looks like there's multiples there. Heritage Ranch, Overview, Overture, Fairview. They're pretty large too.
You've got some good choices, honestly, for the 55 plus. Okay, this is what Cyber Scott. Heritage Ranch in the 55 plus in Fairview. Guys, I want to show you something in light of this not being the best news about rates. I want to show you what Dallas new construction is doing. Okay, so I want to talk to you about the forward commitment, because I think, to those of you who are like, well, I would never buy until I could get 3% or 4% or whatever. I want to show you. What we are seeing. So let me go ahead and show you that now. This is D.R. Horton, okay? And what they say is limited time opportunity, and here it is. Okay, so we have new construction builders all over the place offering these fixed rate FHA mortgages. Okay, so this one is 3.99%, so 4% fixed rate. Okay, and all you have to have is a 3.5% down payment. Okay, and so I'll tell you what I did, and this also has to
even you can do that. They do conventional too.
You could, and then you get 5%. So and these are not rate buy downs. This is not marry the house, date the rate. All right, you can read right here. It says fixed rate. So what I did, I've been working on a video about the day interest rates drop, whatever, that sort of thing, and so what I did, just a fun little adventure. I set a timer, a stopwatch for 10 minutes, and then I just started surfing the web to see how many different different new construction builders I could find offering the forward commitment. Now, by the way, if you aren't familiar with the term forward commitment, you want to answer that one for them?
So forward commitment means that the builder has put up money towards they've decided they gave several $1 million, whatever it's going to take, to provide money that goes to the lender to pay for rate buy down, but it's for the full 30-year buy down. So it costs a little bit more. So it costs more and stuff, but it's not like a 2-1 buy down or a 3-2-1 buy down or anything like that. It's they've already paid the money, and it's going to last for as long as it takes for people to take advantage of it.
So basically, they have to commit to a certain dollar amount of issuing loans at a certain percent mortgage rate, and then they have to pay a fee for that.
And they're working with their specific lender, of course.
You're going to have to go with their lender. So it's very different than a rate buy down, and it has nothing to do with you.
It's actually better.
Really. It has nothing to do with seller contribution limits. Okay. This
Forward, it doesn't affect.
It does not affect contribution limits at all. This is what's killing the pre-owned housing market individual sellers because they can't offer this forward commitment. I love the forward commitment. I get excited anytime I see it. So here's DR Horton. Okay. And then we got Coventry. Maybe you guys have heard about Coventry. They're offering it as well. They've got kind of a blurb here talking about monthly payments starting as low as, and then they say low rates. And here's the fine print. I enlarged it for you guys. Aren't you glad? If you look on their website, it's like teeny, teeny, tiny. But it's a 2-1 buy. Now this is the one I get the most excited about. Okay. It's a 2-1 buy down plus a forward commitment. Okay. So 2-1 buy down. So
you're starting out lower rates and then you're fixed your third year is going to be fixed at a lower rate. Yeah.
Right. So you've got first year 2.99%, second year 3.99%, third year through the 30 is 4.99%. Nice. Yeah. So those of you who thought, I think that the big thing here, and I've got a list of all of these, is to realize that in today's market, you don't have to pay the market rate. There's so many other options here. Let me show you some more. Okay. Let's see here now. Okay, here we have Meritage. Okay, Meritage, and you can see the fine print at the bottom. Now through July 31, we are offering a fixed rate. Okay, fixed rate, guys, the operative word there. Fixed rate of 4.99%. Okay, so that's Meritage. That's 3 builders now. Let's see here now. Okay, this is not showing up right, but this one is Trophy, deals that light up the sky. Okay, and Trophy is offering 4.99% FHA plus $7,500 toward closing costs. Okay. So not only can you get that low rate, but you can also get money towards closing costs as well. Okay. Let's see here now. All right. Special opportunity conventional. I don't know why it's not showing up there. You gotta love it when technology doesn't cooperate. Conventional 30-year fixed 2-1 buy down with first year rate of 2.99%. Okay. And this is the chart of how it works. So this is another example of a 2-1 buy down with a forward commitment. So you can see year 1, 2.99%, year 2, 3.99%, and then years 3 through 30, 4.99%. Now let me answer a couple questions here.
The Heritage Ranch, they look.
Then we'll get back to it.
Real quick, they have Highland Homes, Cahove, looks like it's Highland and Cahove, basically, but prices are
not
good.
bad.
Under 600. Well, there are a few above, but for the most part, the most parts are mostly in the 2,000 square foot area, so 25. Yeah.
Okay. Purple Drink has a good question.
Place, so.
I saw that on Coventry, but is that for inventory homes or homes being built? I was told inventory homes only. Yes, you were told correctly. The issue with the forward commitment is it's a limited amount of time. What they do is they make a deal. They strike a deal ahead of time saying, listen, we will spend $3 million in loans. We want all of them to be at 4%. Fixed rate for 30 years, and we will committing forward that we will do this within the next 120 days.
They can't 6 to 8 months down the line, they can't figure out, they don't know what the rates are going to be, so they can't really pay for that very well. So
it's within a finite
cost
period
could
of
go
time.
up, or you just wouldn't get the rates that you wanted.
And guys, and here is a little hidden tip you probably don't know. When that period of time expires, the builders still have to pay the fee, even if they don't use up that pool of funds. So you can find, if you're heading into that expiration period, you're going to find some builders who are like, look, we'll come down on price. We have to pay a fee for lowering this rate, whether we issue the loan or not.
Yeah.
Okay. So that's where that idea of I'm committing forward in advance. I'm gambling. I'm hoping, right, that I'm going to get enough buyers to use up this amount of money for loans. So just know that as well. You can run it when that, of course, we're not going to necessarily have that information as to when that expires, but, all right.
They don't, most of them just tell you this is the amount of money, and they'll know that much, and they know how much they've sold. So
yeah. And if they've got money they need to use up, okay. There's opportunity there. There's opportunity because they have to pay the fee on it, whether they use the loan or not. So they want to use those loans. Mr. OL says, can these rates be applied to a VA home loan, or are those loans separate and distinct? Well, from what I've read and from what I'm understanding here is that when they buy a package, when this lender buys a package, it has to be the same loan type. Okay. So they might say, I'm going to pay $3 million for an FHA loan to be, fixed at, 4%. And that's why all of them have, this is FHA, this is conventional. So in order for it to be with VA, it needs to be a forward commitment that they've bought a tranche of.
Usually, though, I've seen a lot of times where if they're saying FHA, they'll accept VA as well. But I mean, you have to ask.
It depends on what they've committed to, right? Because they make that decision long before you're on the scene.
Usually lower a lot like FHA, so it works a lot of times.
All right. Well, let's see what other builders here are offering. Okay, that is the last one that I showed of that.
No more builders. So I will tell you, I've been talking to Taylor Morrison at a community recently, and they're offering a forward commitment. It's only 1% for 30-year, but it is a forward commitment. So because there's some homes they're trying to get rid of, so they decided they'd put it on those homes. So
like if you came into the Dallas market and you said, look, I'm willing to buy a house if I can get a rate at 4.99%. And that's all I'll consider. I won't do anything else. We could probably find you a dozen builders, a dozen different builders that you could get that rate with. It's just, it has to do with the dynamics of the market, the fact that we've got a buyer's market, and that's the incentive. Builders have always been known to offer incentives unless it's a raging seller's market. And so the incentives that they're offering right now are all in terms of these buy downs. Let me see here now. All right. Hey, Taya, would you say the only downfall of getting an inventory home despite the better rates is not being able to do a pre-drywall inspection, especially with how fast they slap up these homes?
Depends on when you
That's
buy.
A good question.
Depends on when you buy the inventory. You can buy them earlier. Sometimes they list them. They're available to buy earlier as an inventory home, and
good point.
And you can catch it and do the pre-drywall and all that stuff. So. In
That's
fact, in some
point.
builders, even at that rate, at that point, you might even be able to make a few little internal color changes and such like that. So
not super common, but sometimes. All right, good question. Let me see what Rob has to say here. Rob Casey. Hey, Rob, thank you for chiming in. Good to see you. Jumping in. I'm under contract with Highland Homes at the moment. How would you rate my deal? Inventory home that fell out of contract at $654. I showed up with a discounted price at $625, and I'm sitting at $607.
That's decent.
We can't give an answer to that until we see the data.
Yeah.
Right. You've got to do a market analysis. You've got to look at the sold homes, because it's quite possible that the person
depends on the neighborhood
that was under. You've got to look. You've got to be able to do the data first. So if you used a realtor that didn't give you the data, shame on that realtor. Okay. You got to do that market analysis first, because that's the only way you're going to know if you actually got a good deal or not. All right, Rob, again, let's see here. 2-1 buy down, closing costs covered. Their promotion recently changed to, there you go, 4.99% permanent. That's right. Fixed rate. So that, and I was going to say that I saw that on the Highland Homes website, that they're also offering
4.99% permanent is better.
And I'm telling you, across the board, they're offering these.
So you're saying though, but they're paying your closing costs too, but still, I'd still say, I mean, if you don't want to have to pay the cash for your closing costs, that's a good deal. But if you're looking at what your long-term monthly payment is going to be, 4.99 permanent is
4.99% fixed is very compelling. All right, let's see here now. Hi, Taya. Good point. Catch the inventory home in the early phase. Absolutely. That's absolutely due. And I will say this, part of what we do here at On Track Realty Home in Dallas is when we help you find new construction homes, which we're very proactive, we very much partner with you, is we don't even just look at the builder websites. We call every single one of them. And that's how we find the ones that nobody else knows about yet. We get on the phone and we call, and that's where you find your ones that they're like, hey, we've got 5 more. This one's going to be ready in September. This one's going to be ready in October. And so that's how you find that out.
Yeah,
what you're talking
those early ones too, though. The only thing about that, sometimes it's a little bit harder to negotiate the price down. It depends. It will depend on how many inventories they have and, how well they're selling and things like that. So,
Yeah. Very good point. Okay. Let's see here. Angelica, this is a good question that we get asked a lot. What if there's no data? Okay. So let's just say you have a lender who's trying to decide if they're going to lend on a house. I promise you there is data, because the lender is not going to lend on that house if there's not.
Yeah, there's some
okay?
data.
There is data.
And what I oftentimes, in fact, I do this regardless anyway. We're looking and see what was on MLS, but I always ask the sales consultants for sales data. So I always ask them, what have you, because they don't list everything that they sell.
Yeah. Oh, well, yeah. I mean, only like 1/3 shows up on the MLS, so 1/3 to 1/2. And some builders honestly don't put much out there at all.
Yeah.
So in question, but in terms of like your mathematical approach to there not being any data, number one, MLS, number two, like Dale said, and these kind of go hand in hand, is asking the builder, what do you have? Do you have anything? And if it's absolutely a completely new community where there is nothing, then you go as little ways outside of the community as you have to. Try to stay as close as you can while finding something comparable. Okay, so what you're doing there is you're carefully analyzing these other communities for similar builder, similar amenities. For example, if you have a grand home, brand new, has no other comps, you're not going to compare it to D.R. Horton, which is in a different community. So you're going to have to find a community that's just like it, that's also new. But there's always data. There's always data, because I promise you, lenders won't lend without an appraisal. They're not going to do it. Let's see here now. That's fair. Just wanted an initial glance. Thanks for the feedback and subscribed. Welcome aboard. Yay. I wish we had like an applause button. Woohoo. Yeah, that's awesome. I am wanting so much to get to 10,000 subscribers. I think at my last glance, I'm like 9,975. I'm like, yay, you just got me closer to 10,000. Let's see here now. True, they are more likely to negotiate with a home that's already completed. Yes. Very true. Yes. And so it's a bit of a trade-off there where you can get that pre-drywall inspection that you talked about. But yeah, they're not going to be. In fact, a lot of times they come down on price incrementally on the exact same home. Yeah, they
usually have times. It just depends what they've done before. So, but yeah.
Well, let's go ahead and let's take a look at our numbers. Okay, because I always want to do that. Let's take a look at that. Let's see if we can get this to come up here. Okay. Last week, we took a look at our data, and I want to compare last week to this week. Okay, so we're going to toggle back and forth a little bit, but I want you to keep in mind as we're looking, even though we're comparing week over week, that each of these data points are year over year. Okay, so in other words, when we look at this, let me go ahead and move this one. So we looked at this last week. This was July 1, and year over year, we saw the median sales price was up 0.3%. Okay, so that was up 0.3%. And then let's go ahead and see if we've seen much difference in what's going on this week. Okay, so this is this week, and we see the same thing. So we have not seen change, 0.3%. Okay, median sales price week over week has not changed yet. This is going to be fun because I get to toggle back and forth. All right, next one, active listings. Okay, we saw last week it was 24.4%. All right, let's see what it is this week. 23.2%. So over the course of a week, not a whole lot of change, not much change. Okay. All right. New listings up 4.2%. Last week, let's see here now what it is this week. Okay. Up 6.7%. So we saw, 2%. Yeah, we saw a jump. And remember, this is not week over week. This is saying, but it's still, yeah, this is saying, what was it like last year at this exact point, right? And so compared to last year's numbers, we saw a jump just in a week. Okay, let's see here now. Okay, pending sales. Ooh, okay. Last week we saw that pending sales were down 20%. Now, pending sales are kind of a big deal because that's a forward indicator. Okay, so let's see what's going on this week. Pending sales down 8%. Wow. So that's a good news. Okay, that's what we would want to see, because we don't like seeing those pending sales. Yeah, we don't like seeing those pending sales down like that. So that's a good thing. All right, let's take another look here. Some buyers. All right, closed sales. We saw last week that they were down 4.2%. So where are we this week? Okay, they're up 3.5%. So in the course of a week, we saw some pendings go to close. Okay, so we went from them being down last week to back up this week. So that's a good thing. And what we're looking at here, guys, is the data that I'm showing you right here. The first set is the entire MLS. Okay, and then we'll go down to the county by county. Okay, let's see here. Hopefully, without this taking too terribly long. Right? Okay. Days on market also. Okay. up 26% last week, and up 26% this week. So we didn't see any change there. Nothing meaningful there. Okay. Months of inventory up 24.4% last week. And where are we this week? Okay. Months of inventory up 22%. So we saw a little bit of improvement. You can still see we're sitting at 5.5 months of inventory. That's high. Look at 2023 and how much that has changed. Okay. So how much we've changed there. All right. Let's see here now. Okay. Let's talk about Denton County. We'll go through these fairly quickly. Okay. Median sales price last week was down by 2.3%. Let's see what we're going at here. We've continued to drop in Denton County. Now our prices are down by 3.4% year over year. Okay. Active listings. Oh boy. Last week we saw that they were up 47.9%. What are we looking at this week? Ooh, look at that, guys, up 45.3%. So we went from being at, well, okay, active listings up 47%. Now they're up 45%. Okay. All right. New listings up 16.9%. And by the way, guys, this is the time of year that you would expect to see waning less new listings. Okay. Let's see. New listings up 20%. Okay. So this is Denton County week over week. Pending sales down 20% last week. Okay. Pending sales down just 6% this week. Okay. So we saw that both in the entire MLS as well as Denton County, pending sales aren't in as bad of condition as they were just a week ago. So I think that's good news. That's good to see. Okay. All right. Closed sales down 0.4% last week. Look at that. Way to go, Denton County, up 9.2%. And Denton County had some good closings in a week. I'll tell you what, up 9% in 1 week. So good job, Denton County. That's good to see. All right, let's see here now. Days on market, up 45% last week, up 45% this week. So same thing, no change there. Okay, months of inventory, up 48.6% last week, and up 42.9% this week. Okay, so that, not a whole lot of change there. That gives us an idea of what's going on in Denton County. All right, now Collin County. Okay, so how is Collin County looking? Let's go ahead and take a look at Collin County. And I think I'm going to quit toggling back and forth because it's already almost an hour. You guys probably all want to go have some dinner. So I think I'm going to, if that's okay with everybody, I think we're going to focus on, I know you do. So I think we're going to, let me just go ahead and show you July 8 instead of toggling back and forth. Okay, so we have Collin County, median sales price down 4%. Okay, we saw that last week as well. Active listings up 47.4%. New listings up 17%. Okay, we should be seeing new listings drop off right now. Pending sales are up 0.4%. So not a lot of change year over year. Closed sales up 8.3%. So Collin County also saw, so both Denton County and Collin County, oops guys, sorry, I wasn't showing you that. Both Collin County and Denton County saw a pretty good month there, or pretty good week. Days on market up 42.9%. Months of inventory up 34.2%. We're up in the 5-month range here. Okay, now we're on Tarrant County. So we started out in Denton County, slid over to the, we started out in Denton County here, slid over to the east to Collin County. Now we're going south to Tarrant County. All right, let's see what we have here. Okay, make sure we've got that up there. We do. All right, median sales price is down 1.1%. Active listings up 18%. Okay, our active listings are up. New listings down. And I think, I mean, that's kind of what you would think. So pending sales down 11%. So that means Tarrant County is not going to have good closed sales.
Well, we've kind of seen that anyway, so.
Yeah, closed sales down 4.9%. Okay, so you can see Tarrant County is not necessarily heading in a good direction with them having so many fewer pending sales and closed sales. Days on market are up 26.3%. Months of inventory, not as high as what we saw with the others. It's at 4.1, up 20.6%.
Less listings, probably. Yeah.
All right, we're sliding over to the east. Got Dallas County now that we're going to take a look at. Median sales price in Dallas County is up 6%. Okay, so that's pretty good for Dallas County. Active listings up 26.3%. New listings up 5.2%. Pending sales down 4.9%. So not as bad as what we saw with Tarrant County, but still not great. Okay, so this is Dallas County. Closed sales are up 7.3%. So Dallas County had a pretty good week. I would say Dallas County had some good closings, pretty good week. Days on market still up 35%, and months of inventory,
but not as much inventory. But
not as bad.
4.9%.
So most of your new construction in you don't have nearly as much new construction in Dallas County, but it's going to be
just general sales either. I mean, I would say it's more stabilized communities and stuff. So
yeah. But your new construction is going to be, you've got some in Mesquite, you've got it in like DeSoto, and Glen Heights. You've got it along that southern border. All right, let's see here now. Definitely not as new construction heavy. Okay, let's talk about Rockwall County. All right, guys, up median sales price up 0.3%. Active listings up 37.5% year over year. New listings up 12.2% year over year. Pending sales up 8.7%. That's good to see. Remember that good. That's good because that's a forward indicator. Closed sales. Ooh, Rockwall County's looking good. Up 12.2% year over year. So Rockwall County had a good week. Days on market up 19.4%. And our months of inventory.
7 months.
We saw this last week as well. Yeah. Rockwall has a lot of inventory out there, but they are closing some of it.
So go buy.
Yeah. Yeah. Rockwall County is not a bad place to target. Plus they have good schools there. All right. Let's take a look at Kaufman County. Kaufman County, we saw last week their median sales price was down, and it is still down. Okay, -4, down 4.7% in Kaufman County. All right, let's see here now. Active listings up 16.5%. New listings up 12.6%. Again, we don't really want to see those new listings popping up this time of year. Pending sales up. Okay, so that's good. Pending sales are up. That's a good forward indicator. Okay. Yeah. But closed sales are down. Yeah. So when we look next week, we're probably we're going to see that switch. Okay. We're probably going to see that they've got some good closed sales because they've got so much that's pending. All right. Let's see here now. Days on the market down 9.8%. Okay. So more's moving faster. Months of inventory is 5.8. Yeah. So Rockwall County's got everybody beat though when it comes to those high months of inventory. All right, our last county is Ellis County, and we saw last week Ellis County had some real strength to it, so let's see how they're doing this week. Okay, their median sales price is up 6%. It was up last week, and it's still up. Okay, so 6% year over year. Active listings up 3%. Okay, new listings up 1.2%. So we're seeing stability, right? We're not seeing this huge influx of new things coming on. Okay, so not looking good here though. Pending sales down 9.2%. Okay, so that's not really great there. Closed sales up 12.3%. So they're like the reverse of Kaufman County. So, yeah. Days on the market down 2.4%. Months of inventory
only 5 months.
Down 5.8%. So Ellis County still looks fairly strong. Dallas County had the biggest bump in median sales price for sure. Okay, let's see here. Just a couple more comments and then we're going to scoot. All right, got a little clapping hand there. Thank you. And how about Johnson County? I've not added Johnson County in there. If you guys would like me to, I can add that to the stats and we can go through that. It's always kind of a trade-off of trying to find the most active.
Not as much in Johnson County. Mostly where you're going to be is like that lower corner, southwest corner of Mansfield.
That's what I was going to say.
Ram Prairie, middle of maybe. Yeah. Venus, Alvarado.
Yes, very, very true. So not as quite of a populated or as much activity there. All right, guys. Well, I hope today was helpful. Hope you guys learned a lot about mortgage rate predictions and also as well the opportunity with those forward commitments. I've got some videos coming out where I'm going to explain the forward commitment in a little more detail. I've got a video coming out where I'm going to talk about 3 ways you can get a 4% interest rate today. Okay, so watch for that video because that's going to go into details. 3 ways, not just one. 3. All right, well, everybody listen, have a great week, and we will see you next Tuesday night.
Later, Gators.
All right, bye.